Well, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will be starting afresh with a new indicator. And it's been a while since I did the last session, I think almost a month back. And now that we are back to the business, we will be looking to exploit how we can design and develop the formation for trading in financial markets using these Visual JForex algorithmic setup. This time around, we will be using the indicator named Tom DeMark indicator, and as you can guess, it derives from a person's name. Thomas DeMark is a well-known consultant in the financial market, and if you want more details on him, you can simply Google it. I will be restricting myself to dealing with the indicator, this particular indicator, and in subsequent session we will also look at another indicator from DeMark sequential. Now for this session, let us begin how we can go about our algorithm development using this indicator. This is the USD JPY chart of the 15-minute time frame, and I have plotted this TDI, which stands for Tom DeMark indicator, with the default time frame of 14 candle periods. So here we are looking to trade in a sideways market, and this indicator is from the look of it is almost like RSI, but of course the calculation, the underlying principles are different, but the use is quite similar to the RSI. Here we have these two lines drawn on the levels of zero point 0.7 on the higher side and zero point 0.3 on the lower side. And this gives us the idea of whether the underlying instrument is in overbought or oversold territory. The value above zero point 0.7 is considered as the marker of a overbought situation, whereas if we see that the TDI value is below zero point 0.3, that means the underlying instrument is in the oversold territory and it might reverse. And this is precisely what we are trying to exploit here. And one more thing while dealing with such kind of formation is that, as most of the traders are aware, when the underlying instrument is in strong trend, if it is rising continuously or if it is falling continuously. In such scenarios, these sideways formations will provide us misleading trading signals, and of course, our job is to avoid that kind of situation. So, for that, we will be trying to limit our trades to the sideways kind of scenarios, and for that, we will be using the price action data as well. And prior to that, I will give you a brief idea of how we are going to use TDI. We are dealing with the classical setup. We are not being too innovative here. We simply want to initiate the sell trade when we see that the TDI value is now dipping below zero point 0.7 after having spent time above zero point 0.7. So that will be the opportunity to go short, and vice versa when we see that the TDI value has now started to rise back again above zero point 0.3 after having been below zero point 0.3, then that will be the moment to go long. And that's quite simple. There is not much of difficulty to understand, so I think you have gotten the point. And to trade in the intraday, we will be using the time frame of 15 minutes for this TDI formation. So accordingly, we will have to keep our stop losses and target price sharp. And as I said, we want to trade only when we see that the underlying instrument is in sideways territory. So for that, we will be taking the help of the price formation. We will be utilizing the historical candle data of the hourly candle period. We will compare the last hour's candle low to the candle low 6 hours back, and there should not be much of a difference between these two lows. The last hourly candle low should not be lower than the candle low of 6 hours back by more than 15 pips. For USD JPY, 15 pips is a reasonable price range. And for shorting opportunity, we will need the last hourly candle close or candle high to be not higher than the candle high 6 hours back. So that will be one more condition which we will add while defining the algorithmic structure. So now let us head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. First thing first, we have to get the instrument subscription done. For that, I will need the logical components. So I get three if blocks in place. Okay, here we are using this on candle as the start point, and we want to compare the default instrument with the candle instrument. And candle instrument should match the instrument of choice. So here we have to find Euro USD. It's taking time. Let me start over again. I think I might have missed it. It's proving quite difficult. Okay, we will take USD JPY instead, and I will change the default instrument. Okay, so here our instrument subscription is done. Last as candle instrument. Now we have to also define the position amount at 0 so as to make sure there is no existing open or pending order on the account. And after this, we will get the DeMark indicator block, which you will find listed amongst the indicators. We are going to need two of these to compare the changes in output of the TDI. This I will change to 15 minutes. Shift value of 1 and 2. Okay, and after that I will get the transaction data. For that we are going to use info components. This will be changed to hourly. Shift value of 1 and 6. And to pinpoint the exact entry point, we will take the help of 10-second blocks. So for that, 2 more of these get historical candle. I will change the candle period to 10 seconds. Shift value of 1 and 2. And with this, we have in place the indicator blocks as well as info blocks. Now we are going to also need put in place some calculation blocks, the mathematical components, calculation expression, and as I had said while explaining the idea, that we will be restricting the difference between these two get historical candle high and low to be within a predefined range. So for that I will be defining the range here of 15 pips, and to that we need to take into consideration the pip size of the underlying instrument and multiply it with the desired value, which is 15. So here we have this A1 into A2. And here we have now a newly created variable with the output value of 15 pips. So with this our bare bone structure is ready, and we will need to put more clothes on it, which we will do in next session. We will be getting the buy side of the equation ready first, and after that we will also get the sell side of the equation for this algorithm ready. So we stop here. This is it for the day. I hope you have been able to understand the basic idea and the formation so far. Stay tuned for the next session. I will be back soon. See you next time. Till then, goodbye. Thank you all for joining me.